Hi, I'm Yuan Chao, a dealer from PhillipCapital. Recently, we have seen global equity markets going on a short-term risk-on rally as investors react positively to ECB President Mario Draghi's pledge to do whatever it takes to preserve the euro, and ECB's bond buying plan, which has received Germany's support. A much better than expected US non-farm payroll also gave markets a boost, while easing the pressure on the Fed to introduce more stimulus. However, things are not as rosy as they seem. Europe is still deeply mired in a lingering debt crisis with no solution in sight. Any hopes of resolving the crisis lies on Germany taking on a leading role in a concerted effort by the EU countries. Anything less would probably result in a drawn-out episode with dreaded consequences. A sluggish US economy that has failed to achieve any sort of momentum is also of great concern. In the face of persistently weak US economic figures, how long can the Fed manage to fend off costs for another round of quantitative easing remains to be seen. China, who has always been the bright spot in an unpredictable global economy in recent years, is also facing a slowdown in her own economy. Latest manufacturing PMI figures show that China's manufacturing sector is teetering on the edge of contraction. The fact is the global economic outlook is gloomy and clouded by uncertainty. Market volatility looks set to continue into the second half of the year after a pretty dispiriting first half year for equity investors. In the view of the uncertainty, you should consider diversifying your portfolio with defensive or high-quality dividend stocks. You can also make use of the CFD indices to hedge your positions or trade the volatility depending on your view of the market. Investors should always practice due diligence and prudence in making any investment decisions. That's all for me for this week's market commentary. Thank you for watching.